Hi guys, welcome to today's video, which as you can see there is based on why risk off is very sensible right now with stocks. Now, before I get into this, if this is your first time coming across my videos, please do pause the video, make sure you're comfortable with that before we go ahead. And if you do like the video, subscribe to our channel. We try to upload a couple of times a week, just as much as time allows. Give it a thumbs up if you like it. If you have any other thoughts, let me know in the comments. It all helps me to get my relatively new channel through the YouTube algorithms, and it would be much appreciated. Now, what I really want to talk about for the next 5 minutes, and I will back things up with charts, is I want to just walk you through why the current environment we're in with stocks, obviously with the overall market, is not a place where you want to be allocating all your risk, and I'm just going to walk you through why. Now, the big story of the moment, I think, is this inverted yield curve. Now, we've obviously seen the media, CNBC, Bloomberg, they all make a big deal of this. But what most of you watching this won't know is that the yield curve inverting is actually a bullish signal for the market, at least in the short to medium term. Now, what I mean by that is when the yield curve actually inverts, obviously I'm sure you all know that it's a precursor towards a recession, but from the time that the yield curve inverts until the beginning of a recession, that process actually takes between 12 and 18 months. And what happens when the yield curve inverts is the stock market rises. Now, as we can see, the media have made a big deal of this, but what they won't tell you is it's actually a bullish signal. So that's something to bear in mind. Obviously, the media is there to get your click. Sensational headlines do that, but the reality is this is what the yield curve means. Now, could we absolutely the market tank next week? Yes, it absolutely can, but take things with a pinch of salt. Now, the other story that we have at the moment is obviously the Fed. Now, the Fed, there's very much an interest rate story going on at the moment. We're seeing a rise in volatility whenever there's an announcement. This weekend we have the Jackson Hole conference, which will be super interesting, I think. So that will tell a story in itself. I think when we see the markets next week, I suspect it will look a little bit more different to what it does today. So those are obviously two areas that are, causes for slight concern. Now, when you add into this China, we obviously have this battle going on with the trade war, and whenever there is any announcements, whenever there's any news, again, that impacts the market. We're really seeing a bit of a sideways chop at the moment, especially with stocks. Now, I'm going to focus on a couple of areas that I feel like you should also be considering if they are not areas that are immediately on your radar. Hopefully they are after this video. I'm going to be walking through a couple of charts in just a second, but it's very important to understand that we're in an environment at the moment where it's just any little small, what I would normally deem to be an insignificant move is actually turning into a big deal for the market. Add into that, Mr. Twitter fingers, and again, we've got another issue with the market, and for us to see continuation, there's definitely somebody on Trump's team that understands technical analysis, because every time a tweet goes out, it's always at a key area of support and resistance. So this is something to bear in mind as well. This is not a fluke. There is absolutely somebody that understands technical analysis working with this man. Now, we obviously have the story with gold. Now, a few months ago, I done a YouTube video. It was one of my first ones where I was just saying, look, gold is an area you might want to look. It's breaking out of a 6-year base. That's not a bearish signal for gold. Now, lo and behold, gold has started a massive move. which is lovely. Now, what many of you watching might not understand, I think some of you will understand, but gold is traditionally seen as a bit of a safe haven for capital in times of market stress. Now, what that essentially means is when the stock market, starts to go sideways, it might go down a little bit, we start to see capital flow into other areas of the market. Now, this is trend following 101, and this is why trend following will always be my preferred approach. Just because the stock market isn't going up, it doesn't mean that you can't profit massively from the overall market. Sure, stocks might not be a place that you want to look, but if you understand that when something like gold is breaking out of a 6-year base, that you have hundreds of options to go out there and profit from that move. Something that I've obviously assisted my clients and my group with over the last few months. But, certainly gold, we're very, very close to breaking out and taking the next leg higher. So again, what does that mean for stocks? That's something that you will probably need to do a little bit of research into and, figure out if this is an area that you might want to be playing in. We also have the issue with bonds. Now, with the Treasury bond ETF, now this is TLT. Again, it's no coincidence that when the market last October, started to demonstrate real weakness in stocks, the safe haven areas of the market started to rapidly advance. And again, this is an area where profit targets have just been met with my group, and we've got another breakout with this particular ETF. Now, you don't need to go and trade this particular ETF. If you have an understanding of the market, you'll understand that there are many, many areas that you can look to profit from the market when we get breakouts like this in ETFs like TLT. As we can see, that's been nearly a 30% move over the last few months, and that's outperformed the market. So that's a place that you could have been looking, but it might be an area that you might want to do a bit of due diligence on at the moment also. So I think when we absolutely weigh everything up, I think the question that we probably need to ask ourselves is, is this a place where we want to get aggressive, or is it more of an environment where we might want to get a bit more defensive? Me personally, I am very, very defensive minded at the moment. It's logical to me. It just makes a lot of common sense. I use technical analysis to give myself the edge in the market. There'll be many of you watching this that will absolutely denounce technical analysis as a fraud, and many of you will just say it doesn't work. But I think when you understand that what technical analysis really is the study of price and market psychology, is there anything wrong with understanding what the market sentiment is through technical analysis? Probably not. So yeah, this is really the way that I'm approaching the market at the moment, obviously with my technical hat on. And if this is the first time that you've maybe come through to one of my videos, I'm Sam. I'm currently registered with the CMT Association. I'm working my way towards my chartered status at the moment, which is a huge deal. And I also run honeystocks.com. So if you are somebody out there that perhaps struggles, feel free to go and check out our website. Lots of really cool stuff on there. Hopefully it helps you out in some way. But if you've stuck around to the end, thank you very much for watching, and I'll maybe see you on the next video.